Good afternoon, everybody. My name is Andy Chamberlain. We will be starting the webinar in 3 minutes. We're going to start promptly at 12:30, so just hang on till then. We'll let a few more people join and then we will get going. Okay, see you in a few minutes. Good afternoon, everybody. Welcome to this webinar. My name is Andy Chamberlain. I'm the Director of Policy at IPSE, and I'm joined by my colleague, Alasdair Hutchison, who's the Policy Development Manager. Alasdair, are you there?
Hi, Andy. Yeah, I'm here.
Hi. We're going to try and turn on our webcams so you can see us, I hope. And we are also going to, you should be able to see the slides or one title slide in front of you as well. Let me know if you can see and hear us. That would be very reassuring. I always ask that, but it'll be especially reassuring today because we don't have quite the same level of technical support as we used to because some people have been off sick. So we're managing this, Alasdair and I are managing this on our own. So it'd be very reassuring to know if you could type into the questions box if you can see and hear us and see the slides okay. While you're doing that, I will run through what we're going to be talking about here today. So this is a webinar all about SEISS 2. SEISS, of course, is the Self-Employed Income Support Scheme, which is available to some, but not all, sole traders. We're also going to look at the furlough scheme for limited company directors and have a little bit of a discussion about increasing noises from HMRC about how they're looking to potentially claw back some fraudulent claims and even apply penalties in some instances. And we're going to have quite an in-depth look at the bounce back loans. We've talked about the bounce back loans a lot on these webinars, but we've never really looked at them in an in-depth way, and a few people have suggested to us that we should. So we are hopefully going to meet that requirement today. Now, I'm just going to check, and the one final thing I was going to say is, as always, please send in your questions. And great, many of you are already saying that you can see and hear us, which is very reassuring to know because I've actually set this one up today all on my own, and that's always a great worry, as anyone who knows me and worked with me will tell you. And I've skipped on a few too many slides as well. So without further ado, I'll get going. But yeah, ask your questions and we will try to answer them as best we can. So let's start off then with the Self-Employment Income Support Scheme, which, as you will be aware, opened up last week for the new round of applications. Now, we were very pleased when the Chancellor extended the SEISS and did a SEISS 2. SEISS 1 was for from March, April and May, and then in June he did another one which was June, July and August. He said that will be the final one. He was very, very clear about that. This is the last of these that they want to do. You may have seen some groups calling for it to be extended. We will have to see, but at the moment this is it. This is the only thing that's going to be available from this type of scheme anyway. Now, the last one was 80% of your average profits, looking at previous tax returns. This one is 70%, so slightly less generous. It covers those 3 months that I just talked about. The maximum grant that anyone can get out of this is 6,570. That's the total maximum amount that people can get. If your previous earnings weren't so big, then you won't get that much. And of course, this is sole traders only. It's not for company directors. We will talk about them when we talk about the bounce back loans and the job retention scheme. Now, what they've begun to stress more and more, they stress this more with this one than they did with the last one, is that your business must have been affected by the coronavirus on or after the 14th of July 2020. We're going to have a bit of a chat about what they mean by that as well. It's the same eligibility criteria as before. So you had to have done a tax return in the year 2018, 2019. That's the key thing. If you've done previous tax returns, they'll look at those as well and average out your trading profits over those 3 years. If your average earnings over those years were above £50,000, then you are not in the scheme, out of the scheme altogether, no taper, which we've always said there should have been, and it probably wouldn't have been too difficult to do. And also you had to have more than 50% or 50% or more of your total income from those relevant tax years must have come from self-employment. So if you also had an employed role which gave you more than half of your income, you don't get anything from this scheme. This adversely affected point has raised lots of questions. What does it really mean when they say adversely affected? Well, HMRC have given a little bit of guidance on this when they've actually sent out their notices to people to say, you can claim for this scheme now. And you can see it in front of you there. They say typically when your business has experienced lower income or higher costs due to coronavirus, there is no minimum threshold over which your business income, of course, needs to have changed. In other words, if you can reasonably say that you've earned £1 less than you would have done if it weren't for the coronavirus, you can claim that your business has been adversely affected. I once saw Martin Lewis doing one of his many videos. He has been very good over this period, I have to say, at updating self-employed people, company directors, around what help is out there. I once saw him saying something on this in the early days, saying, well, you'll know if your business has been adversely affected. And I don't want to contradict the great Martin Lewis, of course, but I did think at the time, I still think that this is sort of this is disputable, isn't it? And I can see that there might be HMRC could potentially come in and ask questions and say, well, you said your business was adversely affected, but is it really? And how can you prove that it was? You're sort of proving a negative, really, aren't you? So quite difficult. But I think that you should be able to. I mean, the problem is that you can't even go back and say, well, last year I earned £3,000 during this period, and this year I've earned £3,000 too, but I was expecting that I might earn more because I had thought I was going to get a new client during this period, but that didn't happen because of coronavirus. So you can see how you could get into some difficulties. It may come down to you would have to show HMRC some documentation showing that you were in discussions with a new client to do some work, but that work never came through. Examples that they give are unable to work due to self-isolating or caring responsibilities because of COVID, or that you scaled down, stopped trading, or that you had higher costs, your supply chain was affected, you had to buy PPE even. So these are all examples that HMRC have provided. It seems as if they're going to have a hard time, I think, in proving that someone wasn't adversely affected if they're saying that they were, but it doesn't mean that they won't necessarily try to do that. And when it comes to the SEISS, Alasdair and I were actually just having a talk before this, and we can't find any evidence of them of saying that if they do feel that they've overpaid, and there has been some evidence that they have overpaid in some instances, not very many, or that they've paid out when they shouldn't have done because someone says they're adversely affected, but in fact it might be proven later on that they weren't adversely affected. There's no evidence that they will apply a penalty when it comes to the SEISS scheme, but there is legislation in place now which will enable them to raise an assessment to claw back SEISS payments. So they might be looking to get it back if they feel like they've paid it to someone who shouldn't have had it. But it's almost like we're going to have to wait and see if there's any cases around this before we really understand what are the circumstances in which someone has been paid SEISS when they shouldn't have been, and the HMRC can legally claim that money back. At the moment, that is really open to interpretation, is my opinion on that one. What HMRCs tell you to do is keep those records, like I say, of how and when your business has been affected. business account showing reduced turnover or higher costs, dates your business had to close due to lockdown, shielding or carrying responsibilities due to school closures. It would be sensible to keep some sort of record of anything to do with that, anything that's impacted your business. If you've made a SEISS claim and there is some record of how your business has been impacted by COVID, it's sensible to keep that, and even if you've got an email somewhere that you can go back and find again if you really had to, that it's worth holding on to that sort of thing, because it could be all that's needed just to make HMRC understand that you were adversely affected and therefore you were entitled to the SEISS grant that you claimed for. HMRC are looking out for fraudulent claims, and they've said that claimants are expected to make an honest assessment about whether their business has been affected. Well, as I say, I do think that's open to some interpretation, and I think that they know that too. They just want to make it clear that they don't want people who are basically absolutely fine, business is booming despite the coronavirus, to be making those claims. And I think for some people, business has been okay and possibly even better, depending on your business. You might have done okay out of this during this period, but for the vast majority of people, they haven't done okay, and this SEISS has been a lifeline to those to whom it has applied. Of course, the SEISS scheme didn't help everybody. One group it didn't help was company directors. If you work for a limited company, the SEISS scheme is not for you. It was never for you. And IPSE suggested that whether it would be the SEISS scheme or whether the job retention scheme could be changed or something else should be in place, something should have been there for company directors. And it hasn't been really, apart from the CJRS, the Coronavirus Job Retention Scheme. Now, as we talked about a lot of the time, company directors can make use of the job retention scheme, but only on the salary element of their income. Dividends are not included in that. Now, and also they have to furlough themselves. They can't do any work for their own companies apart from carrying out their statutory duties. So for all those reasons, the job retention scheme was never really particularly a good deal for company directors, not really suitable for them. Nevertheless, HMRC statistics suggest that 312,000 single employee companies have used the JRS. So that does suggest that quite a few company directors have used it, and we know at IPSE that many members and non-members have contacted us saying that they are using it and they might have a query about it in one way or another. So lots of company directors have used it because they haven't had any work, and it's been the only way they can get any money coming in at all. And those claims are valued at 772 million. So, lots and lots of people. Now, not all those people will be a sort of typical IPSE member type company, but some of them will be. So, a lot of company directors, a lot of limited company contractors have made use of the job retention scheme. Now, as we know, it's too late now. If you've never been furloughed before, you can't furlough yourself now. So what I'm about to say really is just for those people that had furloughed themselves. Was the date something like the 10th of June? I have it in my head that was the sort of cut-off period. If you hadn't furloughed yourself,
I think that
was that right?
I think that was right, Andy.
Yeah. If you hadn't been furloughed before the 10th of June, you couldn't furlough yourself after that. And also, the government have begin to decrease the generosity of the scheme. So it went from being 80% of your salary that they would hand back to you via the grant or the support package, whatever you want to call it, 70% in September, and then in October, which is the final month of the scheme at the moment, it's 60%. So it's getting a little less generous. And so if you're a company director who might pay yourself a salary of that around about that 8,500 mark, which many do because that's what you should do because of the way that the national insurance regime kicks in at that price range, then you're already not getting too much on 80%. Break that down monthly, do the maths, 500 quid a month or something, 500-600 quid a month. You're going to get 80% of that. Now you're going to be getting 70% of that from next month, and then the month after that's just going to be 60%. It is now, though, flexible. So you can now furlough yourself for part of your time, but then work for another part of the time. That's actually really good for company directors. You know, one of the things that we always said that was problematic about this, if you're the only person in your business, then and you've got to furlough yourself, that means your business stops. It basically puts your business in jeopardy. And the rules around what you can and can't do are always far too restrictive for our liking. Essentially, what it came down to is you couldn't do anything that wasn't a statutory duty, which means sort of filing accounts. Funnily enough, one of those statutory duties, I've seen this talked about on a few lawyers' blogs and things, one of those statutory duties is to take every step you can to make your business profitable. So, of course, there's a real conflict there. If you're furloughed and you can't work, but at the same time you have a statutory duty to make your business profitable, and someone is saying that they want to speak to you about a future piece of work or whatever it might be, you're not really supposed to do it. So really, it's always been the case that company directors have been put in a vulnerable position, in a difficult position with the way that this particular scheme works. But for many, there wasn't much else available to them. Before we go on to the bounce back loans, which Alasdair is going to talk about, I just thought I'd also quickly mention that there has been, as I said, around the SEISS scheme, and particularly with the job retention scheme, quite a lot of muscle flexing going on by HMRC around people making fraudulent claims under the furlough scheme. You may have picked up on this in various news articles. What's often given as an example is a company which employs a few people, and they've put those employees onto furlough, claim the money, but then ask them to work. Likewise, you have situations where sometimes a company might furlough employees, but not hand on those furlough payments to the employees. Now, Jim Harrer, the permanent secretary of HMRC, has said that employers who ask employees to work whilst furloughed are likely to be committing fraud by false representation. And where a company has made a deliberate incorrect claim for JRS, then HMRC does have the power to apply penalties. Legislation was pushed through earlier on this summer to give them those powers. What sort of penalties are we talking about? Well, actually, it gets a little bit complicated, this, in the way these rules work. But one thing to note is that if you've made a mistake on a claim, you're supposed to tell HMRC within 30 days. If you do that, my understanding is that no penalties will be applied, but they probably will try to get the money back that they've paid to you incorrectly. So if you do think you've made a mistake, if you have done a bit of work and you're worried about it, it's good to tell HMRC within 30 days of that, because then you'll know you'll be safe from the penalties. What are the penalties? Well, this is again a bit complicated, depends on the circumstances, but from what I can tell, the worst case scenario is up to 200% of the amount that's been incorrectly claimed. So if you've had £100, you might and you shouldn't have done, you didn't tell HMRC within the 30 days, and they say that you've deliberately claimed that incorrectly, then they can apply a penalty of £200 plus get the £100 back off you. It's a bit more complicated than that. That's the worst case scenario, but that gives you some idea of what we're talking about here. Now, I'm also aware that I have anecdotally spoken to some people who have said, you know, I've been on furlough, but someone came along and I did do a bit of work. You know, look, you're at risk if you're doing that. That I think that company directors should have had a much more generous and flexible arrangement than the one that they have had. Under the SEISS scheme, sole traders were always allowed to work. They were never stopped from working at all. Under this scheme, because it was really designed for employees of larger companies, directors have only had that to turn to. Some of them, quite a few of them, have turned to that in desperation, and then maybe very, very tempted because one of their favourite old clients has got in touch with them and said, you know what, we really need your help with something. It's not just that you want the money now for that work, but of course you also want to keep that relationship going. You don't want to say to them, actually, sorry, I can't do this, and then lose out to a competitor and then lose that client in the long term. So really putting company directors in a real difficult place, but you are at risk if you've done that. Now, I don't know how HMRC are going to have all the resources that they would need to go and look at all these, 312 just single employee companies, 312,000. single employee companies, are they going to be able to look at all of those companies and go through their records to see if they've had payments, check all their emails to see if they've been in contact with their clients, etc., etc.? I really think that they're not going to be able to do that. But certainly they're making noises. They want it to be known that they have these powers. There is a risk that you could get caught. Have a look at the rules on this and that 30-day thing, because it might just help to put your mind at rest. Having said that, I suspect that many large companies who have behaved, really quite badly around all this, they may well get away with it, because HMRC just won't look into them. And they're the ones that really we should be going after, the ones who have fully made, frankly, fraudulent furlough claims. So yeah, that's what I just wanted to sort of mention that around this, and we will keep you updated on anything that we hear about this, about HMRC looking into companies that have made use of the furlough scheme. How in depth are they looking at that? Are people being contacted, being written letters? We will be keeping a very close eye on that. And if you guys out there watching this hear anything and want to let us know, that would be much appreciated, because then we can, obviously on an anonymous basis, we can keep everyone informed of what's going on. Okay, I'm going to hand over now to Alasdair, who's going to talk about the bounce back loans.
Thanks, Andy. I think, as you mentioned actually at the start, so we have covered the bounce back loans a few times, in quite a few times in the webinars, but really just kind of, headline details. And we've had one or two members get in touch and say it'd be really useful to have a bit more of a kind of breakdown as to, how much can you get, what is the eligibility, what's the picture looking like in terms of lenders, are self-employed people using it, and what are the kind of pros and cons. So that's kind of what we'll cover in the next sort of 10-15 minutes. So really the genesis of the bounce back loans, so they were introduced back in April, late April, and they really came in as a response to the fact that a lot of small and medium-sized businesses were really struggling to access the government's other coronavirus business loan scheme, which was the coronavirus business interruption loan scheme. And they were taking a lot of time, the banks, to process the claims, check the claimants, agree the funding packages that were being put in place. And so to kind of plug that gap in the market, the Chancellor really announced the need for smaller value loans delivered with essentially a few fewer checks, and just to make it a kind of quicker, easier process. So the basics of the bounce back loans are that you can borrow between a minimum of £2,000 and a maximum of £50,000. The amount is capped at 25% of your total turnover. The government is guaranteeing 100% of the loan. You don't have to pay any interest or do any repayments in the first year. And after that point, it will be a fixed interest rate of 2.5%, regardless of the lender. So one of the concerns was, if it's interest free for the first year, does that mean afterwards that the lenders can kind of hose you for the interest in subsequent years? That is not going to happen. One of the built-in features of this is that across lenders, 2.5% thereafter. The length of the loan is 6 years, but you can repay early without penalty. And as I've noted there, the deadline is the 4th of November. So you've still got a couple of months really to get an application in if you want to do. And I've just noted at the bottom a kind of interesting set of statistics. These are the latest ones that I could find from HMRC on total number of applications and total number of loan facilities that have been approved. So you can see there, there's been about 1.4 million applications and 1.1 million have been approved. Roughly speaking, it's an approval rate of just over 80%. Now, there's been a lot of discussion in the media, and certainly we've had kind of anecdotally a few people as well saying that they've had real difficulties getting one of these loans. And of course, if you're kind of that 20% roughly, then you can see why that would be an issue. What I would say is that compared to the coronavirus business interruption loan scheme and the large coronavirus business interruption loan scheme, which is really designed for those very big companies, that take-up rate or that approval rate of around 80%, that is much higher than for either of those, which are both around 50 to 55%. So there is, a completely, and we'll get into some of the difficulties that we've heard from people applying, but there's a good chance that you will, or that you should be approved to get one of these loans if you decide to apply. So Andy, if you want to skip on to the next slide. Thanks. So here's the basic eligibility criteria, and as you can see, it's pretty straightforward, really. You know, there's nothing here which is kind of designed to trip you up. There's a slightly more in-depth kind of full terms and conditions eligibility criteria on the British Business Bank website, which we've got a link to at the end of this. But really, these are the key things. So you have to be based in the UK, you have to have been trading in the UK, and your business has to have been established by the 1st of March this year. You have to have been adversely impacted by the coronavirus. Interestingly on that though, lenders don't have to kind of assess businesses' affordability or viability. I think my understanding is from the application form that this is a kind of self-certification at this point, so you just have to say, yes, I have been affected. The other criteria, not have been a business in difficulty at the end of last year, and actually similar to that, you know, one of the criteria for that SEISS scheme is your business has to derive more than half of its income from its trading activity. But broadly speaking, you know, fairly straightforward. This is why, you know, we've talked a lot on previous webinars about if you're one of those unfortunate kind of self-employed people who's missed out on the SEISS or can't make full use of the JRS, company directors. In broad terms, if you're a sole trader or a company director, then you can apply for this. A few other bits and pieces on this. So your credit rating won't be taken into account as part of your eligibility. We'll get onto some of the lenders and perhaps some of the checks that they're doing. But again, in theory, that is not an issue when you're applying. And also with this, similar to the other schemes, there's nothing precluding you from, if you've received the SEISS grant, from applying for a bounce back loan as well, or even from applying for universal credit. Obviously, that would affect the amount you can claim. But as with all of these government coronavirus schemes, I think the key thing to bear in mind is that, generally speaking, they are independent of one another. So you can claim one without it impacting your chance of getting another one. The only exception for bounce back loans is if you've already received one of the larger kind of coronavirus business interruption loans. So you can't get two different government loans at the same time, essentially. And Andy, if you want to move on to the next bit. I should say as well, so we've put together a kind of full guide to bounce back loans, which we'll be publishing on the website, I think hopefully today. So this information in kind of slightly longer detail will be available there as well. But in terms of the application process, as I say, intended to be fairly straightforward. This is the kind of 4-point plan that the British Business Bank, who are the government agency who the scheme is kind of being delivered via, have put on their website. So there are currently 27 accredited lenders, I think 25 in sort of mainland UK and 27 across Great Britain and Northern Ireland. And there is a bit of a mixed picture in terms of the lenders, their different, you know, the different kind of hoops that you might have to jump through, which ones are only allowing their existing customers to apply, which ones are open to new customers. In terms of those that are accepting new customers, as far as I know, and from the bit of research I've done, I think there are 6 of these, which are Starling Bank, Barclays, HSBC, Yorkshire Bank, Clydesdale Bank, and Metro Bank. It is a bit of a changing picture. I think there are some banks who at the beginning of when the scheme opened said that they would be open to new customers, and then faced with the kind of tsunami of demand quickly stopped that. And I know that a few of those that I've just mentioned are actually going to be operating kind of wait lists as well. But I think those are the 6 that are open to new customers. Obviously, you would be required to set up an account with that bank if you were then to go through them. But I think the key thing in terms of choosing one, and obviously it's up to your discretion to have a look around, you know, read each of the bank's pages on what they offer for the bounce back loans. But the main advice, and certainly the government's advice, is that unless you have any other reason not to do so, contact your bank or building society that you already hold you know, a business account with in the first place. I think that is generally seen as the most kind of sensible, practical advice. It's the least kind of administratively burdensome one. There is a slight difference between if you're a limited company and if you're a sole trader. If you're a limited company, you obviously already have a kind of business account. A lot of sole traders, although it's good practice to open up a business account, many will just be using a personal account. And again, without going into the full details of each of these kind of 25, 27 different lenders and what they're looking for, many will say, well, if you've got a personal account, you may have to, or you will have to then open up a business account in order to facilitate the loan as well. But once you've found and kind of approached a lender, it is a relatively straightforward and simple online application. As I say, it's kind of self-certification, so you shouldn't have to be entering reams of documentation in terms of what you need to provide. They will be doing a few kind of basic fraud checks, so your customer checks, anti-money laundering, and stuff like that. And this is kind of where a bit of the tension has come in a bit of the public discussion, because I think although the British Business Bank was very clear to lenders that they shouldn't be running kind of really intensive full-scale checks, a lot of them, as part of their standard practice due diligence, they have been doing kind of soft credit checks. Essentially, they've been looking at kind of third parties who may hold information on you and kind of having a look into that. So it's not unheard of for the banks to be doing that, and it is. I can understand why people who have applied and been rejected, as having assumed that they wouldn't have to go through quite intensive checks, have then found themselves rebuffed with a kind of vague description from lenders saying, oh, we've had to kind of have a bit of a dig around and we found stuff that makes us kind of hesitant to lend to you. So I can understand that, but in general, this is meant to be a straightforward process. And as I say, I do think that higher approval rate of around 82% is evidence that, in general, if you're able to do an application, you should get approved for this loan. But as I say, I completely understand the experience of those who've not been fortunate to do this. And then ultimately, you will either be approved or not. If you are approved, then again, I've heard very mixed experiences from the people who've got in touch with us on this. Some people have said money's arrived literally within 24 or 48 hours. Other people have gone through the process and they've found that it's taken a couple of weeks for the money to arrive. But in theory, again, money should be coming fairly quickly. If you're not approved, then there's nothing to stop you approaching other lenders as well. So if for whatever reason the lender that you approach decides to decline your application, part of the reason for having so many different accredited lenders is that you can then go elsewhere. And I think a key thing to note in terms of for self-employed people is, which just takes a bit of the worry off. Again, one of the big concerns with the first government loan scheme that was introduced was whether people would have to kind of put up personal assets and collateral in the event that they've struggled to repay the loan. Again, key bit of the criteria for this is that lenders cannot take any form of personal guarantee or recovery action over a borrower's personal assets. And I think you can move on to the next one, Andy. Oh, and just finally on that previous point, in terms of what you need to actually do to put in the application, as I say, very basic information. So that'll be things like your business name, business address, registered number if you're a limited company, your business turnover, copy of a tax return, bank account details, and obviously the value of the loan that you want as well. So as I say, should in theory designed to be fairly straightforward. So what can the loan be used for? So I've just dropped the quote in there from the British Business Bank website, which is really about as detailed as it gets. There is kind of in the weeds of HMRC and Treasury legislation interpretations as to what this can and can't be used for. But this is the basic statement that most people will see on the kind of public website, which is the loan will only be used to provide an economic benefit to the business, for example, providing working capital, not for personal purposes. And I think that's really the key thing to bear in mind. That business and personal split has to be for the economic benefit of the business. So the simplest things that this could be used for will be bills, running costs, wages, perhaps investing in your business, these kind of things. For those who are company directors, or even if you're, if you're self-employed, but you do employ maybe 1 or 2 staff, so you can use a bounce back loan to pay your own director's salary, but not dividends unless you are in profit. And we'll have a bit more information in the guide that we publish online. I don't want to get into too technical detail on this, but there is some risk involved if you are thinking of using it for personal remuneration in some way, in the same way that there would be with any other loan. And so if you are slightly hesitant about specific uses, then we would probably say, the easiest thing to do is have a chat with a tax accountant or advisor about specific uses and the potential ramifications of that. And yeah, we had a chat, Andy, about this before we came on as well. I don't know if you want to add it.
We did. I mean, there is, if you Google around, you can see variances of opinion on this one. Once you've got the bounce back loan, what exactly can you do with it? Can you just pay a dividend at your company? You can pay a dividend out of your company because dividends are from company profits. The profits would have mingled in with that loan, wouldn't they? It will become difficult, but there is a risk that if you're just simply taking the loan, then pay yourself a dividend, that it gets treated like a company loan or a director's loan, which has its own set of rules around it. So just, as you were saying, Alasdair, really, just be a bit wary of that one. There is that you can find opinions, from respectable people saying, be very, very careful, you shouldn't really do it. So just talk to an accountant. Of course, if you're inside your own company and you haven't had any work for ages and you don't know how you're going to pay the bills, you're going to be very tempted to pay that out as a dividend. It's the easiest way to pay it out rather than paying it out as salary. But just talk to an accountant, because it's potential to get yourself into some bother on that one.
And actually, sort of linked to the discussion earlier around JRS and SEISS and HMRC kind of beginning, you can see a bit of a kind of, trickle of news stories about HMRC investigations into fraudulent claims. I did see one the other day related to bounce back loans. I think it was somebody that had tried to funnel, it was over 100 grand, I think, into kind of different bank accounts that were then invested into cryptocurrency, I think. But, so just be very sensible as to what you're using these loans for. And yeah, I think that clear, even though in the description on as I say, the British Business Bank website, it looks quite vague. Keep in mind that basic kind of division between economic benefit for the business, not for personal purposes. And that's kind of a wrap up. As I say, we've got a piece on the website which will go into a bit more detail. And I suppose, at IPSE, we're not in a position to advise you in terms of whether to take this on for your business or not. At the end of the day, you'll know your business better than anyone else. I think if we're to kind of look at the kind of pros and cons, the positives are this is a relatively straightforward, or should be a relatively straightforward application process. It should enable you to get kind of fast access to cash that will help your business. As I say, compared to the slightly more cumbersome CBI LS, this has a higher rate of success for applicants. It is attractive as far as loans go, in terms of there's no repayment interest or fees for that first 12 months, and relatively low rate of annual interest after that as well. And the fact that it's unsecured with no personal guarantees required is another thing which it makes it slightly more attractive. In terms of the kind of disadvantages, we've said before on these podcasts, at the end of the day, there's a lot of reluctance from self-employed people, particularly company directors, to take this on, because ultimately a loan is a loan. It's not a grant. It's a debt that will still need to be repaid. And for a lot of businesses and for a lot of sectors, it's extremely hard to forecast what the next 12 to 18 months are going to look like. So you do have to, be mindful of that. As I say, there's been a lot of discussion online about, which lenders to go to and what are the chances of getting rebuffed by them. I would take some of that discussion with a bit of pinch of salt. We've heard, and we can certainly, maybe it'd be really interesting if people listening to this could, drop in comments, questions about their experiences with different banks and things like that. I've seen a couple of surveys. I think, as Andy said, Martin Lewis's website actually did one of people, comparing it by bank. And so things like that can give you a bit of a rough and ready picture of which ones perhaps people are getting positive responses on and which are not. But again, I would also be mindful of, with about 1.4 million applications, you're going to get pretty huge variance in experience between different lenders. So it's a complicated picture on that. In terms of
We've
other,
had, Alasdair, sorry to interject, we've had a couple of questions actually around, do we have any information on the types of businesses that are being rejected? Why are some businesses, 20% of them, being rejected? What's wrong with those businesses? Is there any sort of intelligence on that at all?
I think so. I've looked a bit into this, and again, unfortunately, there's not a lot of really good data and evidence. The things that I would say are, it does seem like those banks that are doing that extra bit of credit checking for whatever reason, that seems to be tripping some people up. And just having mentioned that Martin Lewis website survey that he did, there was a big discrepancy in that between the application rates for company directors, which were very high, and sole traders, which were significantly lower. So as I say, difficult to know, is that representative sample, all that questions. But I suspect in that instance, it might be because those sole traders primarily would be using a personal account, even for their, for the business finances. Yeah. And that is proving a bit of a sticking point, is why a lot of the lenders are saying, you will have to convert to use a feeder account or just set up a kind of straight up business account. And I think that is proving I think a bit of a sticking point for a lot of sole traders.
We heard in the early days a lot of people saying that they had to set up a business bank account with the lender. Yeah, so if you go into HSBC to get your bounce back loan, it's not impossible. You're going to get that quicker if you've got a business bank account. And I heard from some people saying, I've set up 5 because I just want someone to give me a loan. I'm going around the houses trying to get a loan off different lenders. So I'm setting up business bank accounts with all of them in the hope that will, ease the passage of getting the loan. So I think there is something in that, yeah.
But beyond that, I don't know. I mean, I don't know if there's. I think that, as I say, I keep coming back to the design of the scheme. The intention of the scheme is to be broad-based and as easy as possible for people to access. Whether that's the case or not entirely sure. But it would be interesting to hear from businesses in particular sectors as well. If there's ones that are really, we know that the impact of the lockdown has affected different areas of the economy really differently in terms of your leisure or entertainment events. Creative sectors have been really decimated in some places versus others that have, perhaps in retail, been able to bounce back a little bit quicker. It would be interesting to know if there was anything like that going on. As I say, I don't think that should be counting against people, but hard to say with full confidence.
The problem, you touched on this a minute ago about, if you get a loan, of course it's a loan, it has to be repaid. And, one of the things that is the unfairness of all these schemes has been that some groups have just done better than others. And actually, there's someone on this webinar who helpfully sent in a clarification on that furlough date I mentioned, the 10th of June. Tony Lennon from Bectu, who I know very well, good friend of IPSE's, pointed out that you had to have started your furlough by the 10th of June so that you could complete 3 weeks before the end of June, and then you can furlough yourself again. So if you hadn't started a furlough before then you can't furlough afterwards or make use of the flexible furlough, which has come into place since then. And Tony, by the way, I think it would be great to get you and Bectu onto one of our webinars soon, so I'll contact you separately about that, because Bectu's done so much there. But if you look at, say, the Bectu membership, and these are people who work in film and television, and lots of technical people, say, for example, a cameraman. Now, if a cameraman happens to operate through a limited company, and he's got a colleague who operates as a sole trader, then he's going to be thinking this is completely unfair, because that sole trader now gets the SEISS scheme. It's a grant, doesn't have to repay it, can still work whilst getting that grant. Whereas me, because I happen to have a limited company, probably because I work with some clients who've insisted on it historically, I don't really even care about this limited company thing. It's not something that I particularly identify with. I find it a bit of a bind, to be honest, but I do it anyway. Those people were really shocked to find out when the Chancellor announced that SEISS scheme that it wouldn't apply to them. And so they then go into this realm of, okay, well, you can get a bounce back loan. Well, good, and they are loans on favourable terms, as you say, Alasdair. But the problem is they're a loan, and other people are getting a grant. So for some people it's a gift, for some people it's a loan, and this is the real problem. And it would be really good to actually speak to Tony if you're still with us about that, maybe get you onto a webinar at some stage. Well, a couple of other, but just before we get off the bounce back loans, a couple of other questions I've been furiously scribbling down while you've been talking, Alasdair. Nigel asked, can you get a bounce back loan even if there's quite a lot of money in your company? So the business bank account has got money because you've been saving money into that for a few years, and you make an application for a loan. Can you still get that loan in those instances?
There's nothing that I've read in the guidance which suggests that you shouldn't be able to. As I say, the only thing which goes back slightly where you're talking about, Andy, this slightly tricky question of adversely affected. When you make the application, you will have to confirm that your business has been affected by coronavirus. Now, that you can still have a lot of money in your business account and have been affected by coronavirus. No one's saying that can't be an issue. But in theory, I would say that shouldn't be a blockage at all. There's not a kind of cap of you have to have less than this amount in your account. I think you should still be able to kind of proceed on that basis.
Yeah. And Peter has asked, Peter said that he's worried about, he's got a bounce back loan, and he's worried about the forthcoming IR35 changes. Of course, I'm always banging on about IR35. Always grateful to get a question to get me back onto that subject. Peter, thank you. But the point Peter's making is quite an interesting one I hadn't fully thought of before. He's saying, look, when the IR35 changes come in next April, if they do, IPSE still very much campaigning to stop them, but the government seems determined to push them in, unfortunately. If and when those changes come in, if Peter can't find work which is outside of IR35, he's likely to be working via some umbrella and probably going to be paid directly, i.e. there'll be no money going into his company. So how will his company be able to pay back the bounce back loan? I actually don't have the answer for you on that one, Peter, but I do think that's a very, very good point, and something that I will be looking into and potentially raising with policymakers as another reason why this is a very difficult and complicated time to bring in this change that you want to do with R35, which, by the way, there'll never be a good time to do that change, but if there's a bad time, it's now. I don't think we had any more questions that I saw. We might have had some since on the bounce back. Oh yes, not quite a question on the bounce back loans, but somewhat related to company directors. Dira Jadine asked, can a limited company director apply for universal credit? The answer is yes, isn't it, Alasdair?
Yeah. So one of the sort of strange quirks of our whole tax employment welfare system is that although for the SEISS grant, if you're a company director, the government is essentially saying you're not self-employed, you're a company director instead. For universal credit, you will be treated as self-employed for your application if you are a company director. So yeah, provided you meet all the other eligibility criteria, which are things we've talked about before on previous webinars, the £16,000 savings threshold, the earnings threshold, which is determined by your various personal circumstances. When you put that in, no reason at all why company directors cannot claim UC.
Great. We've got a few questions about the flexible furlough scheme and JRS and all the rest of it. But just before we get onto those, I just wanted to finish off our slides. This is the sort of pretty much the last slide or penultimate slide, just to let you know about the campaigning, because we did have a question from Louise at the top of this webinar who said, is all the campaigning for those that have received very little or nothing during the coronavirus finished? Is there anyone who's campaigning, for example, tax relief or a bounce back grant to help people recover over the next couple of years? Well, let me just quickly update you about the campaigning. So IPSE continues to campaign and lobby to get more support for those people that have not had enough support. But however, the government is very much in the mindset of how are we going to wind up these schemes. The government actually wants to start putting these to bed rather than expanding them. I think that one area that we think is there's a couple of things that I think we could say on this. One is that if there is going to be a second spike or a second wave or whatever you want to call it of coronavirus, and that forces something like another lockdown or perhaps lots and lots of the country going into little local lockdowns, the case for reopening these schemes gets much stronger. It will be difficult for the government to argue why it was appropriate to have this in the first lockdown but not appropriate for the next one. And I think that then all this work that we continue to do around the excluded groups, these are the newly self-employed people, people who earn over the threshold, people who earn just under that 50% of their total income from self-employment, who really have been left out, and of course company directors. That's where we say to them, well, if we're going to look at this, then we must look at plugging these gaps now, because that's really problematic for the SEISS scheme. Now, some groups are calling for the SEISS scheme to be extended into the early part of next year, including, I believe, BEC2. And I can well understand why, because in certain sectors, we all know what sectors they are, hospitality, events, the coronavirus has been absolutely devastating. And there are people who have been living off the SEISS scheme grants that they've had, and they're basically getting the last payment of that around about now, and thoughts are turning to what's going to happen next month. At the moment, the government is saying they are not even considering it, but some groups are pushing for it to be extended. I think IPSE's view on this is, of course, if the government wants to go ahead and extend it, that'll be great. But we're really concerned. We still come back to this point that the SEISS scheme has excluded too many people. And in fact, it's probably paid some people that don't really need the money because they have been earning it okay, and it hasn't given some people who really do need the money, it hasn't given it to them. So we're saying let's look at that. If we're going to extend this, let's look at actually making it so that it targets people that need the money more. You know, but I do appreciate why in certain sectors there are people who are saying it must continue. I personally don't think it will continue as it is. I think it would be great if it does, but I have to say I don't think, you know, having spoken to various officials and seen what the Chancellor said about this at the time when he talked about this being the final payment, it's clear that it's going to take a big shift in thinking on that. We are going to be putting in our submission for the autumn budget, which is going to be happening probably in October. There's no date for it yet, but we'll be looking out for that. And one of the things that we've been talking to some other groups about, Louise, is an idea around some kind of tax relief or time to pay tax. People are going to have a tax bill to pay in January, and they may well have spent that pot of money. And I think that's one interesting area that we can reasonably say to the government is, what leeway can we get on that? Could we have a payment schedule that's much more generous than it would normally be? Normally it's, you know, pay by the end of Jan, isn't it? Or risk penalties. I think that HMRC must be aware that people are going to start contacting them and saying, I can't pay my tax bill because of the, you know, how terrible 2020's been. And so what can we do? What can we work out to make this? They don't want to start applying penalties to people who can't pay their tax bill through no fault of their own. So I think that we can reasonably ask for that, but that's something that we're considering. It's not something that we've decided yet, but those are the sorts of ideas that are floating around. So Louise, yes, there is still thought going into what can we ask the government to do to help people who need that help, and we and IPSE are still doing it. You can get in touch with IPSE with any thoughts that you have on any of this stuff. Your experiences are always really useful. We use them as case studies anonymously if you want us to be anonymous, and it helps us with our lobbying work, so we can say to the government, look, we've just heard from so many businesses that are saying this or that, and this is where we think we need to target some help. So do get in touch with us. Get in touch with us via our website. How can I move this slide on? Here we go then. So here's a few useful links. There's one there about that adversely affected point that we were talking around, which I still believe is open to some interpretation, but you might find that useful. There's the bounce back loans FAQ from the British Business Bank. You can sign up to our newsletter, which we keep you informed of all this stuff and all of our future webinars, and you can check out our website. Just going back then to some of the questions that we've had so far.
There's a couple. Oh, sorry.
Go ahead. Go on.
I was just going to say there was one along the lines of, you know, limited company director had not had any work since you know, since April, March time, really struggling. What are the options? And I think, so as I say, we've done different options before in other webinars, but I think to just sum them up, the main things, if you're in that position, I would look at, one are tax deferrals if you have any kind of tax payments coming up, get in touch with HMRC, use the time to pay service and look at how you can rearrange those. The second would be universal credit. As I say, you'll be treated as self-employed in the application for that, and provided you meet the other kind of eligibility criteria, that is an option for getting some income in. The third would be probably the bounce back loans, and you'll have to kind of take a view as to whether that's right for your company or not. And the last one, which I do want to mention, again, we've touched on this in previous webinars, but I just want to mention it again because I think the closing date for these is tomorrow, is these so-called discretionary grant funds that local authorities have been given by central government. Now, essentially, central government gave local councils different pots of money and said, these are for you to allocate to businesses in your area who are struggling and who have been, you know, excluded from or have not been able to access certain government support schemes. Now, there's a bit of a priority listing of which businesses should get that grant funding, which the local authorities have then distributed. But I've read a lot of stories about local councils that have not spent their full grant funding money that they've been allocated. So I have been kind of suggesting to people, it is worth contacting your local authority if you're a business that has had no support whatsoever, and just checking and seeing if they have any additional funding available. And as I say, I think the deadline for that is tomorrow. So if you are in that kind of real tough position, then I would suggest trying to do that.
We've had a little bit of commentary from Per, who says that lenders, this is about the bounce back loans, lenders will advise that fixed asset acquisitions are not allowed. And he also says you cannot increase director salaries. So thank you for those interventions, Per. Is that right, Alison, that you can't increase director salaries? Is that the way you see it?
I would have to double check, but I think that is correct. Yeah. There's a similar one on that vein, which is, can you spend the bounce back loan on training courses? So if you want to do a bit of kind of professional develop on the side, again, to me, you would probably have to just do a quick check with the lender if that's the case. But upon reading the guidance and the regulations, to me, there's nothing in that which would suggest that you can't do that. I think, you know, come back to that key point, economic benefit for the business. If you think doing, you know, a training course is going to help you in some way that will, you know, help market your business, improve performance of your business, then that to me seems like a legitimate use of a bounce back loan.
Priton asked, he said, look, I started, or what if you've started at the end of 2019? I think he's saying as a sole trader. Does that mean you can't access it? He says he had trouble accessing it. Priton, that is because you could not access it, which is unfair, and we campaigned and lobbied government to change that rule. But essentially, if you didn't do a tax return in the year 1819 as a sole trader, then you are not entitled to the SEISS scheme. We really struggled and asked the government to consider whether newly self-employed people, i.e. people who had only started out in business after April 19, could do their tax return for the years 2019, 2020, and then make use of the scheme. But they said no, because that would mean it would be open to fraud, which, you know, it's a difficult thing to argue against, but I would have thought that maybe something could have been done to mitigate that risk. And unfortunately, Priton, newly self-employed people, I think like yourself, are some of the people who have been really left out in the cold by this. A few questions about the furlough scheme. Peter said, is it really so rare for a limited company contractor to pay themselves you know, a much higher proportion of the company's profits as their own salary? It's not necessarily that rare, Peter. In fact, one of our colleagues was on the radio the other day, and someone phoned in and said exactly that, and said, look, I pay myself quite a lot of the company's salary, so I can therefore make more full use of the furlough scheme. The difficulty is that for a lot of people in business, they don't quite know how much money they're going to be making. So they keep, it's more flexible to leave it going into the company and pay out dividends as and when that profit is there. And also, it's what accountants advise you to do, but in a lot of cases, perfectly legitimate to pay yourself mostly in dividends, and many company directors do that. And they have been the ones who have left out. It's not necessarily rare for someone to pay themselves a higher proportion of salary, but it's just it is in most cases, I believe, typical for company directors to pay themselves mostly in dividends. Duncan sent something very useful through, which was a letter that he had received via his MP from the Chancellor, all about the Chancellor's explanation of why dividend payments cannot be supported in the same way as salary can via the job retention scheme, or indeed the SEISS scheme. And I've seen these arguments before, Duncan, from the Chancellor. Actually, IPSE came up with a proposal and sent it into the Treasury. We called it the pay now, claw back later idea. I think, as you said at the end of your question, you said, look, we can evidence where these dividends have come from. We said exactly the same thing, and we said, look, we know this would require potentially more manual checking, but you could simply pay out and say to people, if you're breaking the rules here, we're going to impose some strict penalties, you're committing fraud. I would have thought that would have sorted out quite a lot of that nonsense just on the off, and then just do some random spot checks like they always do to enforce it. But and the Treasury Select Committee fully endorsed our proposal. They said in their report published midsummer that they said, IPSE has handed you on a plate, government, how you could do this, and we think you should do it. The Chancellor wrote back to the Treasury and said, yes, we've looked at IPSE's proposal, but, and then goes into the arguments that you've seen in your letter. So unfortunately, the government are unwilling to take us up on that one. But thank you for sending that through. Rose asks, can we get more detail on flexible furlough for company directors? I'll just check on our website, Rose. I think we have some information on there, and if we don't, we will get it on there. We did have formally a template letter for company directors that wanted to make use of the initial furlough scheme. I have updated that letter, and I think it's on the website. He says, I just haven't seen it for a little while, to make use of it for people that might want to go into flexible furlough. But basically, it is possible. There's lots of information out there. There will be links on our website to other places where you can find information. It is a complicated thing, flexible furlough, actually, particularly if you're furloughing yourself as a company director. But it is possible. So go and have a look around to see if you can find some more information on that on our website, and let us know if you want us to follow up with any further queries. Nina asked a question saying that she'd been on furlough, worked for her own company, limited company director, furloughed herself because there was no work available, but has been doing some marketing of herself, but hasn't picked up any work yet, but has been doing a bit of marketing of herself, trying to pick up some work, but as a separate entity, as a self-employed person. This is a really interesting question. Now, the way it works for employees is that if IPSE decided to furlough me and I was on furlough, there is nothing to stop me from going and working for another company. I could go and get a job in Sainsbury's. That's the example always given, because they were hiring, weren't they, at the time that everyone else was furloughing people. I could go and get a job in a supermarket. There's nothing to stop me doing that. I could go and work as a self-employed, whatever I might want to be, plumber. I just can't work for IPSE. That's the main thing. If IPSE's furloughed me, I cannot work for IPSE. It doesn't mean I can't work elsewhere. So I think, Nina, that if you go off then as outside of your company and go out looking to pick up some work somewhere else and marketing yourself in that way, I think you should be okay. Now, I think you said you haven't actually had any work, but if you did get some work, whatever you do, don't put that work through your company. Don't invoice via your company or anything like that. That's where you're really going to be getting into trouble. So it's probably quite a fine line. I'd recommend keeping a really clear paper trail which shows that you've furloughed yourself from your company, but you're seeking work outside of that elsewhere. I think that there's nothing wrong with that. Just be really clear about it. An anonymous question or comment really came in saying that this restriction on what you can do as a company director, could that not be construed as restraint of trade and therefore illegal from HMRC? Look, I would say probably not. I think you're going to have a hard time getting that proven in a court of law. So it's probably a bit of a rabbit hole with a dead end at the end of it to go and look down. But it does highlight the point that I said before, that these rules have always been really tricky for company directors. This idea that you have to furlough yourself and then really tough restrictions on what you can and can't, mainly what you can't do while you're furloughed for your own company, when in fact you're supposed to be, you want to keep your company going, don't you? It is clearly a very difficult area. Whether you say it's restraint of trade and then go and, I don't know, pursue that through the courts or something is, frankly, not something that I'd recommend following up on. I just think it's going to be very difficult and painful. Maybe you'd be proven right, but it wouldn't be easy to do. And I think that's all the questions that I had jotted down, but I think there's been a few since then. Have you seen any, Alasdair?
There's a few. One was on whether somebody could use their bounce back loan to pay their corporation tax bill, as they had no work during lockdown and wouldn't be able to pay it otherwise. Was that a valid use of the bounce back loan? Again, as far as I'm aware, yes, that is, because that's, you know, a business outgoing that you have to pay and couldn't otherwise pay if you had the loan. So you should. There's no reason to me why that wouldn't be the case. But there was, unless Andy, you have any thoughts?
Well,
on
just
that?
a comment on that one. It just makes me think that this is why some groups are considering whether there could be some leeway about this January tax payment, whether that's as a sole trader doing a self-assessment return or your corporation tax bill or whatever it might be. You know, imagine if someone hasn't yet taken out the bounce back loan, but faced with a corporation tax bill, decides that they will get out a loan simply to pay their tax bill. Is that really what we want to be seeing going on right now? Is that what the government even want? Or would it be more sensible to defer in some way that tax payment to allow companies to get naturally back into time of profit and then pay that tax bill? I think that's one of the interesting questions for this government over this autumn period as we approach that January deadline. That question sort of touches a little bit on that. Sorry, Alasdair, go ahead.
No, that's fine. I think what I'll do with that one is I'll double check that because we're in touch with a few officials at the business department. So I might get in touch with them, and we can, once our piece on the website is up on this, I can maybe amend it with some of the kind of specific queries that people have put in today, because I think there's some really good questions about, you know, what can and can't it be used for, and I think you know, quite reasonably, people just want a bit of clarity on that as well.
Listen, we've gone over. I didn't realise we've actually gone over time, so I think we have. I hope we've answered most questions that have come in. We do get a lot of questions, which is great. As I always say, we do make a note of your questions. If we haven't answered them, then we use them, and even if we have answered them, we often use them to update our FAQs and things that are available on our website. You can also get in touch with us via our website, via the links you can see there. You will get these links sent to you within the next 24 hours, along with a feedback form. Give us feedback what you thought of the webinar. It's always good to know. We always ask you too if there's other areas of webinars that you think we should do. You know, one of those was bounce back loans, so we've hopefully had a bit more of a discussion about that than we have done previously. Let us know, because we're really grateful for that feedback. And I'm going to end it there. Thank you, Alasdair. Thank you, everyone who's joined us. We will be back next week with a webinar which is going to be looking at mental health. There's been lots of talk around the mental health of freelancers and company directors, and there's a bit of survey evidence out there which has shown that it's taken a real hit during this time. We're going to be joined, I think, by Matthew Knight from Leapers, who knows all about this stuff, and we have some of our own research, which is going to be brand new, which we're going to be talking about on that webinar. So join us next week if you can. And thanks very much. Bye.
Cheers.